Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And today it's August 7 and we're starting from euro-dollar pair with Jakub Novak as usual. So first, let's have a look in 5-minute chart for analyzing Friday's transactions. The test of 1.0961 on Friday afternoon coinciding with the rise of the MACD line from zero prompted a buy signal that led to a price increase of over 40 pips. Reports on the volume of orders in Germany and industrial output in France and Italy did not help euro rise last Friday. However, weak data on the US labor market favored bullish traders, leading to a sharp increase in euro-dollar pair during the US trading session. Today, pressure may return on the pair unless the data on industrial production in Germany and investor confidence in the Eurozone show very good values. Although disappointing reports will continue the pair's decline, a lower price euro will certainly attract more buyers. For long positions, buy euro when the quote reached 1.0989 and take profit at the price of 1.1035. Bullish traders will return to the market in the event of very good reports on the Eurozone. However, before buying, ensure that the MACD line is above zero or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.0960, but the MACD line should be in an oversold area, as only by that will the market reverse to 1.0989 at 1.1035. For short positions, sell euro when the quote reached 1.0960. and take profit at the price of 1.0919. Pressure will intensify in the case of weak data from the Eurozone. However, before selling, make sure that the MACD line is below zero or is starting to drop down from it. Euro can also be sold after two consecutive price tests of 1.0989, but the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0960 and 1.0919. The next stage of our review is the next major, Sebastian Seliger with GBP USD currency pair. The GBP USD pair keeps making lower lows and lower highs, and the last lower high made at the level of 1.2791. The bears are in control of this market, so traders should pay attention to the intraday technical support seen at 1.2687 and 1.2620. The next target for bulls is seen at the level of 1.2590, which is the key short-term technical support level. The weak and negative momentum on the H4 timeframe chart supports the short-term bearish outlook for GBP. We've got a medium-term trading plan for USD CAD currency pair. Arif Makmur presents. Because the CCI indicator managed to break down its main three levels, and is now stuck at the level of zero, which indicates a resistance on the daily chart of the USD CHF currency pair. As long as this pair is not corrected upwards beyond the 0.8804 level, then in the next few days the currency pair will try to go down to the test of 0.8551. And this would be a main target. And if the momentum and volatility are sufficiently supportive, then the 0.8458 area level will be the next target for this currency pair. And we got more trading ideas from area of Markmore. This time it's AUD-USD currency pair. On the daily chart of the AUD-USD currency pair, a deviation appears between the price movement and the CCI histogram indicator, which is also stuck at the level 0, indicating that the AUD-USD upward movement is being halted by resistance of a bearish 1, 2, and 3 pattern, followed by the bearish Ross hook. Plus, the price movement is below WMA20, which all indicates that as long as there are no significant upward rally, especially if it managed to break above 0.6824 level, AUD-USD in the next few days has the potential to weaken down to the 0.6460 level. And finally, here's Laurie Bailey with USD-GPY pair forecast. Let's have a look. On Friday, the USD-GPY pair fell by 79 pips, extending the downward movement from Thursday. The movement for the last two sessions was quite unusual, as it had previously consolidated above the strong technical levels around the target of 142.82. However, the Marlin oscillator managed to stay in the positive territory, aiding the price in recouping losses. We expect the pair to return above 142.82, even possibly rise towards the target level at 144.73. Critical supports are located at the lower range, 140.35 and 140.93. On the 4-hour chart, the price is reversing from the MACD line. It's a blue line on graphic. Marlin oscillator gives the impression that it will return to the uptrend area. Marlin will likely cross the boundary when the price moves above the August 2nd low of 142.25. That's all for today. See you online soon and good luck.